Welcome back to Stocklabs for another market recap. It is Easter weekend, so happy Easter to everyone that celebrates. We're through the first week of April already, so into Q2, and it was kind of a mixed ish week for markets. They mostly just chopped around. There wasn't a big follow through from kind of the end of Q1 ramp that took place, but not a whole lot really fell apart too badly either. Um, the Dow was the only one green, up 7/10. S&P was flat, down 6 bips. Qs were down a little less than 1%, and IWM actually did do pretty poorly, down 2.5% for the week. It gave up sort of the end of quarter ramp more or less in one go. You know, there was some economic data that came out poor, and the smaller cap economically sensitive index didn't like that too much. So yeah, the small caps were under some pretty decent pressure all week, although the rest were only slightly negative. And then gold had a nice week, up 2%, along with bonds also 2%, and crude outperformed, or had like another big week up, or had a big week up 6% almost. So, if you were only going by this sort of view, it kind of looks risk off. You have bonds ramping, gold ramping, crude ramping, indices not going anywhere. So, more of a, you know, investors weren't pressing, the trades that they took right at the end of the quarter in Q1. So if we look at our leadership stocks, since these ones are such a large component of the market, I think market cap of all of these, if you added them up, let's see, what is it? Uh, there's 9 trillion in market cap here represented on these 8 stocks. So yeah, you can see that wherever these go is where the market's going. Google had a really nice week, up 4.5%. Meta also up another 2%. So Meta is now still way 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 off those Q4 2022 lows, and seems to be doing okay. I guess investors are liking the cost cutting and all the layoffs and stuff that they have enacted in recent months. Microsoft up 1%. Okay, it beat the Nasdaq, but nothing special here. Apple was flat. Same with the S&P. Amazon slightly worse than Nasdaq. Same with Netflix. And Nvidia down 3% on the week. Not sure if there was anything there. And Tesla was the big loser, down double digits, almost 11% for the week. Kind of broke through, down through 200, and kept going this week. Not sure if there was anything specific driving this, or if it was just purely kind of a technical thing with momentum traders playing some downside. But yeah, bad week for Tesla, which is it's always been sort of on the more volatile side, even with its giant market cap. It trades all over the place. So if we look at our industries for breadth, you can see that there was sort of broad weakness. Basic materials even were flat, despite crude and the metals really ramping up. The weakness in the securities that are sort of derivatives of those commodities was, there was weakness in them, because if people are projecting a weaker economy, then, even if the commodity itself goes up for whatever reason, then the stocks, not expected to translate into their earnings and things like that. Utilities up 2.4%. This is more kind of classic risk off stuff. Tech down 3%. So that median tech stock really underperformed the Nasdaq. That's kind of, kind of another bearish indicator. Nasdaq was held up by some of the bigger stuff, but under the surface, there was more selling going on than what you could tell from just the major indices. Services also down about 3%, along with consumer 3% down. I mean, this kind of is in the same vein as, if questions are coming in about the economy, then people are expecting weakness in these stocks that are exposed to that. Industrials, same thing with that, but they were even worse, down almost 5%. Healthcare down in 1.25%, not too bad, even though healthcare has been not acting great of late. And financials were flat-ish. Again, I've been saying this since the start of the year, not expecting really financials to return a whole lot. In 2023, they still have the ongoing turmoil and fallout from Silicon Valley Bank and FRC and Schwab, even whoever uh, whoever is viewed that week as the more vulnerable. Well, Silicon Valley Bank is gone, but out of all the regionals and smaller players, any one of them could take the spotlight if if something happened to them. Subsector wise, we've got gold and silver outperforming. Gold was the only one up over 5%, so up 6.3%. We had major oils were up, even though basic materials as a whole were flat. Silver was up big last week too, I think. Although gold wasn't. Gold kind of made sort of a catch-up move this past week. And other than that, there's not a whole lot to mention here. On the downside, we have a decent number. So EVs were leading on the downside. Solar was leading on the downside. Alt energy, which is kind of related to both, same thing. Rec vehicles even down 7%. So you can see like auto parts, a lot of semis on here. So it's not good when these sorts of sectors are on sort of the biggest loser list. We've got 25. We got 31 sectors down over 5%, which is for a short week. It was a 4-day trading week. Market was closed on Good Friday, except for the futures market. This is kind of pronounced, but also could be nothing. So we'll see. I mean, it could just be some profit taking to start the second quarter, and then investors will come back in and buy up the market again. But we don't know. So yeah, this is kind of the breakdown. Breadth overall was weak. I would say it's weaker than what the indices suggested, with the exception of IWM. IWM was just terrible, the performance. If we look at breadth by market cap, got 1 to 5 billion, down 2.5%, basically in line with IWM. So 5 to 10 billion was down 2.3%, more or less the same thing. 10 to 50 billion, down 1.25. 50 to 100 billion was down 4/10, and 100 billion cap and up was actually positive on the week. So that's a bit. The S&P was flat, the Qs were slightly negative, but more or less the average TerraCap stock was green on the week. So that's kind of, this is sort of becoming a little bit of a pattern where, the biggest companies are taking money essentially. I mean, the flows they're attracting some flows from investors, even though the rest of the market is kind of stagnant to weak. People are willing to stuff some money into these very large companies, presumably because they're quote unquote safe. So yeah, I mean, that's kind of the action we had this week. And we look at intelligence for this week, the coming week, then there's not a whole lot here to go off of. We've got ultra short China. We've got ultra short crude. So crude had that nice bounce in the past week. Stocklabs looking for that to pull back. China, I think Stocklabs was bearish China last week too. I don't know how that fared. Let's see. I guess China was more or less the same as our markets, kind of just mixed-ish to flat. But yeah, Stocklabs bearish on China this week. And if we flip this around, okay, bearish for this week. MSOX, this is weed, just perpetually bearish. NRGD, this is inverse big oil, is bearish, so oil should be bullish, even though on the other side, crude itself was bearish. So not sure. Oil bearish again, massive downtrend in natty gas off the highs from 2022. And blockchain bearish. We've got ultra short, but Brazil is bearish, so bullish Brazil. Bearish FANG. These would be our TerraCap tech companies. And UNG bearish, kind of same thing with oil. Real estate bearish. I've been seeing some stories pop up about stress in commercial real estate, although I think I don't have specifics, but the more or less, I think people are starting to look for that market to crack a bit, whether it's based on credit or I don't know. But yeah, real estate bearish this week. AC, you're just going to ignore this. Okay, so we've got like a handful of things bearish. There's not hardly anything on the bullish side of the ledger. That's kind of telling me we're going to have to skew slightly cautious this week for second week of April. Although we have a hybrid, on 3-month look back, we have a hybrid oversold signal from sort of the early. Let's see, the fifth was Monday, Tuesday, something like that, earlier in the week. So based on this overall signal, you'd have to sort of be slightly positive on the market, but just based on the action from all of these other things on the tape, I mean, I'm not seeing this as like really that capitulatory. I think probably you'll see some more chop to general weakness in the market this week. And from there, if we can set an oversold signal on sort of a 6-month basis, I'd be like more confident in that. We haven't had one in a long time, actually going back to September 2022. So Q3 2022 was the last actual oversold signal. Now, this sort of area on the calendar was the most, the lows in the market that were generated here were not ever really tested again. But our oscillator can get back down to this level without the market getting to that level. So I want to see sort of like an oversold signal. We almost got one middle of March on a 6-month basis, but not quite. So this would represent sort of a more considerable drop in the market to get to from where we are to where we would register this signal. But we'll have to see how the market behaves. And other than that, I don't have a whole lot. So first full trading week of April is coming up. There's going to be some Fed speakers, I think on Monday and maybe later in the week. We're also going to get CPI. We're going to get Fed minutes. So there's going to be a lot of action. And yeah, we'll be following it all along. So hope you guys have a good week. Again, happy Easter. And talk to you later. Bye.